let's start about on talking about support and resistance, kind of like basic technical analysis. We're going to use the pricing tool on thinkorswim, and we're going to use trend lines as well to find support resistance. So let's start with this clean chart. There's nothing on it, just candles and corporate actions. But let's start with this, and I am on the yearly day chart. So to kind of find us support and resistance, you gotta see the top or the bottom of each trend.
You want to run 3 candles, right?
Yeah.
Minimum.
Yeah. So right here, you can see that it failed to break through resistance 3 times. See, 1, 2, 3, and we're talking about GE, General Electric. 1, 2, 3, and it failed, and it broke down. That could also be a demand zone. If you look at the demand zone. If you look at the weekly chart, you got like a little demand zone right here, and then it breaks down.
Mm-hmm.
And so we're going to set up the resistance line right here.
Mm-hmm.
I want to check, grab my drawing tool. No, where's my drawing tool? These tools change.
Yeah, no, I've had a little bit of trouble finagling with those things. It's
what happened to my chart?
They try to make it easier, and it's a little harder to use now.
Yeah, it is.
Who else is here?
Mike.
Oh, hey, Mike. Okay. I got these new braces in. They're like the invisible ones, so my voice is a little bit hard to talk right now.
We're gonna plot the line right here since we have 3 points for reference as a resistance, and going to go to my drawing tool. Gonna have to edit this video. And you can see 1, 2, 3 right there. That's gonna be your resistance right there. And your support, which is probably going to be heavy support on this side right here. Even though it peaks down a little bit, it's still a good area of support. I try to break it, bounce back. Nope, doesn't want to break resistance. It comes back down. It tries to break support. It doesn't do it, and it goes back up. And finally, it breaks support right here. So one of the things I like to do when plotting support and resistance is not usually look at the daily. It actually depends what time frame I am trading, but for the most part, I will use a weekly chart or a month because it tells me it gives me a better depiction of where it's heading for the next few days or few weeks.
Mm-hmm.
And you can see there's 1 point of reference right there, 2 right here,
mm-hmm.
and multiple down here.
So yeah, you can use that sideways area.
Yeah. That area, so that area is a very good support area. And I'm going to plot it right there, and you can actually double click on the tool, and it'll plot it right there. Price level 1, and you can see where it was back here in July of when was it, 2015. You can see where it was the resistance. And it broke through, and now it's support. So this is a key support area around here, the 2709.
Yes.
And if you zoom into other chart frames, it'll follow it, and you can see it's kind of bouncing off that area. That's why I like to use the weekly, because it'll follow it, and it'll follow the rules all throughout the time frames. And even if you go even lower, a smaller time frame, you can see where it's bouncing off, right? And if you go to 15, well, not 15, it's to zoom in, maybe 30 minutes, you'll see right there. It will come down to that area and come back up. Now, let's say you were day trading this, right? Let's go maybe in the 4-hour chart and plot some support resistance areas. And we'll use the price level tool. And you can see right here, a lot of point of references right here. 1, 2, 3, 4, 5, and shorter term right here. I'm gonna put it around this area because there's multiple right there, and even you could even go into this area right here just to You can see this one right here is probably going to be your loading zone, your supply demand area. If
You
it
should
goes up
highlight
right here,
You should highlight
if
it
it,
with the highlight tool.
if it goes up to that area, it's going to try to break through the 2831, and if it can't, it's going to come back down to like the 2708. But this is like a good area to maybe start shorting if it's depending on any indicators. The MTTS indicator, if it says oversold, then you start going long. If it says overbought, then that's where you start loading for shorts because that'll break down.
So 2930 is the major resistance, right? Would you say the major resistance is at 2930? Or remember, what's the difference between major resistance and minor support versus major support?
So the difference between those two is the major and minor. The major is going to have more points of references, more points where it fails to break through. Like for example, this one is going to be a major support, a major resistance, because it has like multiple areas right here where it failed to break through, multiple areas where it became support. So this is going to be a key resistance break. If it breaks this resistance, we could see maybe a dollar climb, maybe into the 30-50s, longer term, and 32-38 at this height right here.
And you'll usually find those on the higher time frames as well.
Right.
It's easier to find them anyway.
Yes.
So,
Exactly.
so if you go right here, you could definitely see. Remember, I was talking about that that loading zone. You could see it right here, Mike. Right, somewhere around the load zone area. You got a rally, base, and then a drop. So you can plot those. You can spot those weeklies through the weekly, daily, maybe even a small time frame, like around the 1 hour, 4 hours. So you know where to trade. You know where to go on a day, depending on the time frame you're trading. So if you're day trading it, you want to use a smaller time frame, like a 4 hour, to plot your resistance. If you're going longer term, like a swing, you go day or maybe even weekly. That way you know how far it is going to go before you have to take profits. I typically don't use the monthly. That's more for like if you're going to hold like a year or so, because there's no reason to look at smaller time frame if you're going to hold that long. Because if you go smaller time frame, if you're going to hold that long, then you're going to create yourself a headache because you're going to see it fluctuate a lot, and you're going to want to exit a lot. So this is why you want to plot your support resistance at the time frame you're trading. That way you know where it's going to go, how it's going to break down. You have your stop losses, your profit orders, and just let it do what it needs to do to go to a profit. Hopefully that makes sense. The other thing I'm going to show you, maybe a different one where it's a little bit more, where it has a little bit more of a trend. Let's see. Apple has a little bit more of a trend right here. You can see it's trending. I had previously drawn a Fibonacci on this guy, and it's no longer valid because it already broke out from that. Okay, so you can also use the support, the trend lines to define a support and resistance. It's actually very, it's not going to work. Let's find something else. Let's see. Maybe S&P 500. Yeah, I think with this will work. Okay. Yeah. So let's plot a trend line right here, and it follows the same rules. The same 3 or more points of reference for a trend, right? So we could plot one right here. You can see a multiple points of reference right here. 1, 2, 3, 4, and it doesn't have to be like 100%, but the more closer you get to the actual point, low or high, the better. But like I said, it doesn't have to be an actual trend, actual plot. And you can see right here, this was the resistance at one point on this trend line, and it broke through that and then became support. and it's actually bouncing off this level of support all the way up until it breaks it. It comes back up, and it kind of uses that. If you also plot it along with the price, if you plot it along with the price line on trend line on support resistance lines, you can actually get a little bit more feeling of what's going to do or where's it going to bounce from. Like for example, right here, let's zoom in a little bit. You got this support right here. What did S&P 500 do on Friday? It came down to that support line and it bounced back up. You could see where it keeps bouncing off of this trend line right here and this price levels. So you could use a combination of both to find areas where to trade it, where the price comes down and where you're going to enter your trade. Like for example, if it comes back, if it broke this price level right here at 241.95, it would come back down to maybe around 242, about 50 cents lower, and then bounce back up because you have this trend line acting as a support as well. And it plays through whichever trend it's going for. You could also price. No, not this one. Let me go change my tool. For example, on this guy right here, you can draw now the trend right here. 2 points of reference, and it'll be the same thing. You want more than 2, but 2 it's the minimum, the bare minimum. And you can see right here, it'll play a factor down the line, a few months down the line, where the price is going to be, where's it going to bounce from. And for example, let's see where it's going to trade. You can plot right here. Well, it's not only 2. That's not very strong.
Look at December 12th.
Hey, where am I? December. Okay, right here.
Mm-hmm.
Yeah. It just broke through a couple places, but that, I mean,
you could even use a regression line on there. They already have the drawing tool. You don't have to even draw the 3 lines.
No, I mean you could use a regression line, but I like to use this one, this better. I guess it makes a little bias on myself, but it doesn't matter what kind of tool you use it. I'm just doing the basic one. So
does that look like what technical pattern does that look like overall? Are we looking at like an ascending wedge or ascending? What do you think that is?
It's all on the on your imagination, actually.
Yeah.
Right now there's no. Yeah, right now there's no pattern. It just these 3 lines right here kind of look like a regression line, and if you plot the regression line, it'll look similar. It'll be just between this one right here, and somewhere in the middle right here, and then down here, and it'll look like a regression line. And just basically that's what it did. It's a regression line. So if you look at the this point of reference and this point of reference right here on this trend line, as acting as a resistance and support, and we come up to here when it's making new highs, and look at this, it's acting as a resistance. It's right here, and it drops. Give me a hand.
Looks like there's healthy pullback in the S&P, and then usually there's a bounce back after it touches either the middle line or the bottom line.
Well, it's doing what it needs to do based on technical analysis. Now, whether it breaks this resistance or it keeps going up, it all depends on the economic data that comes in on the next couple of days, right? So
yeah, the Fed's talk on Wednesday, so that's going to be key.
Yeah. So when people are saying, "Oh, the Feds are scared," and blah blah blah, it's like, wait, are you plotting your support resistance lines? Are you plotting your technical analysis? Because if you're not, you just get making an estimate of what the market is doing based on its reaction. But if you were plotting your support resistance lines, your trend lines, you would know, oh, I had this trend line for a few days now, and I could see where it's going to stop right there. So I would have known that it was going to fail to break through here. It would have been obvious. And this drop would have been, the people are taking profits based on this resistance line. And I could show you the people that were trading this, that making money on this, they were plotting their resistance lines. They knew where to take the profits, where to enter a short. And from here, from this stop right here to this low right here, that's a significant difference. That's like a $3 change. And on options, that's very significant gains,
Mm-hmm.
right? And it just so happened that I started freaking out and panicking, and it made that $3 drop.
Or covered
it
call strategy. You could own the portfolio of an S&P index fund and then just short it through the covered call strategy and still own the stock. So you can make money the whole short term.
Yeah, you could do that, or you could just buy puts.
Yeah,
Or
exactly. Or exactly. You could even own the S&P index fund and then just buy puts outright. So that way, you're just hedging your portfolio like insurance.
Well, it depends on the strategy you're taking on. There's no best strategy for a specific for everybody. So just on the strategy that people are using, they could either do the cover calls, they could do the shorting the calls, they could just grab the put. It all depends on the strategy the traders is employing. But the key point here is plot your support resistance, plot your trend lines, so you know where the market's headed after it meets an area of supply and demand.
Quick question: can you overlay this with the dollar index or the dollar itself? Let's see if that would be pertinent. Or you want to do oil, either one, because I don't think DX is on here anymore. But you could just
DX is not on there.
You could use UUP.
I'm not gonna overlay it right now.
Okay.
But I'm not trying to make a correlation between the gold and oil and the S&P.
Nothing dollar, but the dollar.
Yeah. But
just looking at support and resistance type things for this day.
Okay, I see. Okay.
Hey, do me a favor real quick, Cesar. Pull back on the daily. Zoom out a little bit. I was looking at something on here, and take a line from the low around December 2nd and run it up to the low of May 18th.
Okay, wait, let me get a tool. A trend line?
Yeah, a trend line.
Low December 2nd, and then May 18th.
May 18th.
May 8th. The low?
Yeah, or the close, or the open, I mean. Yeah, that's fine. No, you were fine where you were. Go down.
Yeah, the bottom of the candle.
Yeah, right there.
Oh, they're open. Yeah, right there.
Yeah, the open. All right, and then delete those other three real quick if you don't care.
Or you can just change the color.
Yeah, that's fine. Either way.
I'm just gonna delete them.
And now take a trend line from December 13th high.
At the top of that peak.
Yeah, right there, and then take that up to the high of yesterday or Friday. Now, what's that look like?
I like that.
It's a channel.
From that time, it's ascending channel, and right now we're at the top of that ascending channel. Now, we did have a break, obviously, back in February, but it wasn't real strong. But that is just another way to look. I mean, another idea on possible support and resistance on that trend.
Yes, I like that. So using the lows of the market, and then you use the highs of the